Good afternoon to everyone who's on the Q3 call for Gulf Oil Lubricants. We are extremely delighted to share with you that this has been an all-time record quarter for us. Obviously, the results have been put out, and we have seen that it's been a 59% growth in terms of the quarter 3 PAT, coming in at 42 crores. And certainly all the other figures have been excellent growth in terms of the revenues and in terms of the profits. And this is mainly due to the excellent volume growth that we have seen across in our business. We were earlier tracking at about 10-11%, and as we have seen last quarter 13%. That has gone up to 22% volume growth in this quarter 3. There has been obviously some base effect of demonetizing, but what is extremely encouraging is that the segments in which we are strong and we are growing have recorded very good robust growths. To start with, the diesel engine oil segment, which is normally a single digit growth, has grown upwards of 15%, and for us this is around 40% of our portfolio, and both in the commercial vehicles, tractor segment, across our bazaar markets, across our dealership sales, OEM dealership sales, we have seen diesel engine oils doing extremely well in this quarter, and that also shows that the economy is picking up, the demand is picking up. In addition to that, motorcycle oils, which have always been a front runner for us, in this quarter has grown 35% plus. So that's again excellent growth for us. Our own products in the bazaar, the OEM products we have with Bajaj, and that is really excellent in terms of growth. And the other segment, which is the passenger car, which is a new focus segment, has grown upwards of 15% in this quarter. And overall, what we are seeing is a lot of green shoots coming in terms of renewed sort of vigor in terms of the growth levels. Even the IMF segment, which had gone slow, is now bouncing back and is growing positively in this quarter. The infrastructure customers, which is about 6-7% of our sale. So right across all these segments, we have seen that the growth has been excellent in this quarter. We are hopeful that this new trajectory of growth will take us to a higher plane in terms of overall growth, which has been 10-11% consistently for many years now. And we'd like to also add here that all the initiatives which we have put in, whether it is distribution or our new tie-ups with OEMs, our brand building, we have in fact done a lot in that. And we have announced a new tie-up with one of the construction OEMs, Kobelco, which is in the top 5 players in the construction equipments, and that is a new tie-up which has come in. We've also started some exports to Bajaj Auto's markets overseas from India, and that has helped. You will recall I had mentioned a major campaign we did for our passenger car, which was based on our international tie-up with Manchester United. Not only is Manchester United doing well as a team in the top 3 in the Premier League, we have seen that this campaign has really helped us to create good visibility, excitement amongst trade, and we are seeing that the visibility in the cities when we took outdoor, and also we have the advertisements coming in the Manchester United matches on Star. All this has contributed to really take the brand to a higher level. And what is also happy to report to you that we have in certain segments started leading the price increase in a small way. So that is a good strength of the brand. And while we see costs are going up, we are also taking our prices up. As we have always told you that the industry is quite disciplined, and we see a lot of the market, major players in the market doing that, who are basically in the in the top ends of the brand awareness, and that is a good sign that has happened in the market. We have done that, and we have also made initiatives, very unique initiatives. Last year we succeeded with the IPL social media campaign and the other campaigns during the Pune Rising Super Giants league matches. We have used the same concept of involving the fans with our Manchester United property and launched something very unique in India for the first time, a Gulf Fan Academy, and that is also getting a lot of excitement amongst the audience. Again, the audience that is the football crazy Manchester United fan, he would then get predisposed to look at buying our passenger car, our motorcycle oils. So that's a good campaign. We continue to do on-ground activations in a very big way. We have done a number of service camps, conducted oil camps in the farm segment. I understand that's over 15,000 service changes we have initiated. We are also doing a lot of work in the rural segment, and our retailer loyalty program is again gaining a lot of traction. And we also seen that the top retailers are also recording a handsome double-digit growth in their offtake to the market. So these are excellent signs. And obviously, complete team effort. The team is very charged up. We believe our brand values of quality, endurance, passion translate into everything we do, even our activations on the ground, and that is one of the reasons of our success. We also would like to share with you that Chennai, as scheduled, has started production, and this quarter we would see that nearly a fourth of our production starting in Chennai, mainly catering to south and to our eastern locations. And as we had shared earlier, the Chennai would be manufacturing the entire product range what we manufacture in Silvassa. So it is definitely going to help also in terms of service levels, and the capacity that we have should also help us in attracting new customers in the long term. So this is what I would like to share in terms of the overall business that has happened. We are definitely expecting Jan, Feb, March to continue a good momentum in growth. As I mentioned, there was some base effect in October, November, December, but the higher trajectory of growth in diesel engine oil and what we have achieved in motorcycle, coupled with that, we have some exciting plans which are drawn up in these segments, and that should help us to take us to a higher plane of growth in the coming quarter. And I now request Manish to share a few of the financial highlights also. Manish, over to you.
Yeah. Thank you, Ravi. Good afternoon, everybody. I recall the September con call after the quarter 2 results, and where we have mentioned that it has been a record quarter, and I am happy to again share that, as Ravi mentioned, we had again record-breaking performance across sales, profits, and revenues. Volumes 22%, revenue 34%, and profit at 59% growth. It's been excellent. At the same time, it's been a good product mix, helping in spite of input costs going up, with the crude rising from the levels of $45 to $50 to close to now $70. There have been good product mix improvement. B2C, B2B ratios have been good in the last 2 quarters, which have helped us continue with the good margin realization, and with that, gross margins we have been able to maintain our gross margins at pretty much the same level, almost with only 1% impact there. And as Ravi mentioned, the industry has been disciplined, so another price increase is taken during the current 2018, so that will take care of the base oil impact which is there. At the same time, our investments in the brands have continued. So this quarter, as we mentioned, our campaign is going on. So our A&P expenses have been continued at the same level of last quarter, which is at close to 7.5% of the top line, which usually you will remember was in the range of 6 to 7%. But the last 2 quarters, we have slightly increased the investments there. And we continue to remain on the balance sheet side debt-free in spite of our capex in the Chennai plant, going to complete now. It's almost done, and we have started the pilot production, but that has been internally completely funded, except some minor import. We have taken some loans, but largely internally funded, and we continue to remain net debt-free on the balance sheet side. With this, I think we can take the questions now.
Thank you. Ladies and gentlemen, we will now begin with the question-answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Requesting all the participants to please limit your question to 2 per participant only. You may come back in the question queue if you have a follow-up. Thank you. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Basant Patil from HDFC Securities. Please go ahead.
Hello, sir.
Hello.
Congratulations on the good set of numbers, and thanks for giving an opportunity. Sir, just wanted to understand...
Excuse me, sir. I'm sorry to interrupt, but requesting you to please speak a bit louder.
So just wanted to understand, this DEO includes the construction equipment portfolio also? You are indicating the DEO, diesel engine oils largely. So that includes the construction equipment segment?
See, construction equipment we sell through the excavators and the other loaders and all. They use a lot of hydraulic oils, and they also use diesel engine oils. So yes, the diesel engine growth includes it is at the company level, so it aggregates what we also sell to that segment. But just to clarify, the construction segment also buys other products like hydraulic oils and greases and gear oils.
So what I wanted to understand, what you are given the 15% growth, that is inclusive of the construction equipment.
Yes, yes. So it's on a composite level. All diesel engine oils that we sell as a company, which includes commercial vehicles, tractors, and as you mentioned, everywhere there is a diesel engine oil, including construction equipment.
Sir, what is the contribution from NCOs to our overall revenue mix? As we mentioned, DO is around 40%. So can you share around?
Yeah. So MCO we have at about 20-21% of our mix, and around 4 to 5% is personal mobility.
Okay. Sir,
Yeah, sorry, 4 to 5% is PCMO. So together, motorcycle and PCMO make up personal mobility.
Okay. Sir, this PCMO includes the bazaar trade, which category?
Yes, everything. This figures that we are giving you is on a category level for the company, irrespective of the channel.
Irrespective. Sir, and going ahead, even after commissioning the Chennai plant, so do you expect even for the couple of quarters this strong double-digit volume likely to continue? So what's your thought on that?
So we have been growing double-digit consistently. Actually, for us, double-digit, the 10-11% growth, and you see we have also done 13% in some quarters. So that is the growth we have been getting consistently. And Chennai will help us obviously because we have a large market in south and east. So in terms of requirement of capacity, we anyway needed it because Silvassa was running at close to 100%. So we needed the capacity, and as we grow our businesses in various segments, the spare capacity in Chennai and now a little bit in Silvassa also, because we are shifting the production of south to Chennai, will help us to gain more customers. And the growth level, as I mentioned to you, this quarter has been very good in diesel engine oils, motorcycle. So hopefully if the 11-12% growth average which we've been getting, we'll be able to improve on that.
Sir, one thing largely, so as a product mix, South accounts for almost over 30% of the volume. Is that correct?
That's right, close to that.
Yes. So if we are going to cater that from Chennai plant, so what kind of logistics and distribution cost we are going to save in terms? Can you give?
Yeah, sure. Manish, wanna?
So we have mentioned in our earlier calls as well that for running a new plant, you need a certain fixed cost will go up.
Yes, sir. Yeah.
At the same time, we'll get a freight saving, as you rightly pointed out. So both will offset. So what we are getting is net some savings will be there in incremental, but largely the extra fixed cost incurred for a new plant, except the depreciation, will be covered up by the freight savings, and that means that we are getting 40,000 tons extra capacity without any extra fixed cost.
Sir, just one last question. Sir, commenting on the base oil prices, so if crude goes up to around $70-75, assuming, so is there any threat to get the base oil as a raw material? Whenever you need the base oil requirement, is that scarcity happens? Is that correct? So what's your thought on that?
No, so there are certain demand supply gaps, but those gaps are temporary. It's not that base oil is not available. It is always available at a certain price.
Okay.
If the crude goes up, base oil goes up usually with a lag time effect of 2 to 3 months.
Okay.
But there may be a temporary mismatch between demand and supply of a certain grade of base oil because there are various grades. But there is no challenge in terms of getting a base oil.
Okay. So what is the current prices of base oil? Can you share that, sir?
No, it's very difficult because there are, as I mentioned, various grades of base oils.
Yeah.
And these base oils have been on an upward trajectory for the last 3-4 months.
Yes, sir.
Everybody carries an inventory of 2-3 months, but then thereafter it starts impacting. And as we mentioned, we are already taking a price increase in the current quarter, and that should hopefully take care of the increases as long as crude remains around $70.
Okay, sir. Thank you, and all the best, sir.
Thank you.
Thank you. Before we take the next question, I would like to remind all the participants, if you have a question, please press star and 1 on your touchtone telephone. We take the next question from the line of Ronak Sarda from Axis Capital. Please go ahead.
Yeah, hi, sir.
Hello.
Hi. So first question was again on raw material costs. So the base oil price, as you indicated, are almost linked to crude oil price with a lag. So how's the demand and supply situation? Do you see base oil prices to jump as high as the crude oil have gone up in last 6-8 months, or based on the demand supply for base oil, we are not expecting a sharp increase? That will be the first question.
So as I just mentioned, base oil has been also on the rise for the last 4-5 months. It's not that it's not been going up. It has been going up steadily. And that's why to proactively manage margins, we have taken a price increase already.
Right, and that kind of covers the current increase in base oil price.
Yeah, as long as the crude remains in the range of $65-70.
Okay, perfect. Right, and sir, what would be the advertisement spend for the quarter? Has that kind of normalized, because last quarter we had some spillover impact?
No, so we have incurred 7.5% this quarter as well, because the campaign was ongoing. While having the last call in the month of November, we have mentioned that this campaign is ongoing for 2 quarters. So this current quarter also, December quarter also, we have continued with the campaign in a mega way, and A&P continues to be in that range of 7.5%.
Right, sir. And sir, a bit of a question on how the competitive intensity changes. In a rising crude price scenario, is it the state oil PSU companies, do they have a upper hand because of the?
So in terms of price increase, as I mentioned, the top brands that are there usually take the pricing up first, and then we have the price-oriented brands, and of course the PSUs also have moved in this quarter, what we have seen. So there is a movement, but maybe sometimes there's a lag time on the various movements, because each of the companies has their own internal policies and stocking levels. So we do see that it does come after the, you would say that we have seen that the PSUs would take a price increase immediately after the market takes it up overall.
Sure. Okay.
Thank you, Ronald.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Next question is from the line of Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good afternoon, sir. Congratulations on good set of numbers.
Thank you.
First, just wanted to clarify, your volume on an absolute terms would be around 24.5 million liters?
Yeah, that's right.
Okay, and secondly, the price hike that you have taken, so to what is the magnitude of the price hike that you have taken in January?
So the price hike has been taken across various categories of products based on our strengths and where we are trying to do things in a different way.
Right.
But largely it will be in the range of 3 to 4%, especially for the bazaar market. And B2B pricing, is mostly linked to formulas.
Yeah.
And that keeps on going up or down depending on the base oil movements.
Okay, and what about competition? The PSUs in particular, have they also taken a price hike? Because
so you have seen, as I mentioned to you, even the PSUs have taken the pricing. We don't know about all 3 PSUs, but we have seen 1 or 2 PSUs where the price has moved.
Okay, and they've also taken on the similar lines, around 3 to 4%, because that's what has been the indication for the entire market.
Yeah, so some of the players have taken up similar to us, and some of the people had not taken the previous price increase, so they've taken it together.
Okay, so in their case it is more than what you have taken.
So probably last time they did not take it up for whatever internal reasons.
Okay. And sir, second, just a small question. So currently, what is the automotive versus industrial mix? It used to be around 65% versus 35% in the previous quarter. So has there been any change on this? I think it has improved, I guess, the automotive segment.
No, because we are doing both the segments at the same pace. This quarter also it is 65-35 only.
65-35 is the automotive industrial range.
Yeah.
Okay, so fair enough. Thank you so much.
Thank you.
Thank you. A reminder to all the participants in the conference, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Well, that seems to be the last question. I would now hand the floor back to the management for any closing remarks.
Yeah, thank you.
I'm so sorry to interrupt. We just have a question lined up. Can we?
Okay, yeah, sure.
Yes, the question is from the line of Vivek Sethia from Seabird and Mackertich. Please go ahead.
Yes, sir. Good afternoon, sir.
Good afternoon, Vivek.
Sir, if you could just throw some light on what is the present size of the lubricant industry in India right now, and what is our market share in it?
Sorry, can you repeat the question, the first part, present?
What is the size of the lubricant industry in India, and what is our market share in it?
Yeah, so the total market we estimate is around 2.6 or 2.7 million tons, and including process oils. So if you take out process oils, it's about 1.7 to 1.8, and that is where we play in. So that is basically automotive and industrial grades. Within this overall market, we would be at about 5%. 1.8, so that's 5%. And within the out of this 1.8, about 800 odd would be bazaar market. And in the bazaar market, we estimate we'll be about a little bit above 7.5% market share. And then within the segments of this the automotive market, if you take diesel engine oils, again we classify ourselves in a segment called new generation. We would be close to 8-9% there. In motorcycle oils, we would be similar 8-9% in the bazaar, and some of the other shares, obviously passenger car, will be less than 5%. So this will give you an idea overall, where we are playing, and obviously the market size. There are more details you can get into B2C, B2B. That would be route to market. So overall, this is how the market is.
So you told 2.6 to 2.7 billion tons is the market size, right? And excluding process oil, it's 1.7, 1.8 billion tons. Right?
That's right. That's right.
And out of that, we have a 5% market share, out of 1.8 billion tons, right?
That's right. And out of the bazaar, which is 800, we have about 7.5, a little above 7.5.
Bazaar is included in that 1.8 billion tons, right?
That's right. Bazaar is a subset of that 1.8.
Okay. And so just last general thing, like since we know that the coming of EV is on the trend right now, so what impact do we see of EV in the next, say?
Yeah, so that's Vivek. The EV. What we have done is we have tried to see how the impact will come. So there will be some impact, but for the next 12 to 15 years, given the growth of the industry in terms of automotive population of vehicles and construction equipment, by 2030, the market is not going to get into any. It's going to continue growing and continue to be a large market all round in terms of lubricants. Maybe after 2030, 2035 onwards, you will see some impact where the market will probably level off. But that's our estimate. The next 15 years, we really don't see any impact, and in fact, growth will continue.
Okay. And sir, I know like directly the lubricants will not be utilized in EV. So are there any other areas in which we can, try to get into in this EV segment, like create a market here in the EV segment?
So at the moment, we are definitely looking at that strategy, but nothing concrete at the moment to share.
Okay. Okay. Thank you so much.
Thank you so much, Vivek.
Thank you. We take the next question from the line of Meghman Seta, individual investor. Please go ahead.
Yes. Good afternoon and congratulations on a good set of numbers.
Good afternoon. Thank you.
Yeah, my question is on the spare capacity that now we have, given that Chennai is operational. Strategically, over the next couple of years, what kind of new business do we see ourselves going after? This spare capacity should be giving us certain options that we didn't have, say, 12 months ago. Thanks.
Yeah, thanks. So yes, we have got we have Chennai, which is we have started with the 40,000 capacity, which we can actually ramp up even later if you want. But we definitely are looking at a larger customer base in all our segments. To start with, there is obviously the OEMs who we are talking to, who are there are 15 odd OEMs around Chennai itself, and then of course we are also looking at some of the OEMs who are expanding not only in India but other markets. We are looking at getting into more into the segments like greases, of course, which we don't manufacture, but there are segments like greases, coolants. We are also looking at the infrastructure segment, which is going to be very big, and that's really going to be one of the things where the volume capacity can get utilized. So all these segments for us will present opportunities. In fact, we can now look at even big customers, because if there's a large customer available with a very large base, we can offer this in terms of capacity. And some of the exports that we were actually, there are a lot of opportunities which were coming our way. But now with this capacity, we can also look at some exports to neighboring countries and countries like Africa.
Okay, great. Thank you, sir.
Thank you.
Thank you.
Thank you. A reminder to all the participants, if you have a question, you may press star and one. Next question is from the line of Paras Siddenbala from Enam Holding. Please go ahead.
Hi Ravi, congratulations on a good set of numbers.
Thank you, Paras.
Yeah. Sir, I just wanted to know on the commercial vehicle side, on the CVO side, we have seen good volume growth. What are the key trends that you are seeing, which do you think this kind of growth is sustainable, and what are the key trends that you are seeing in the industry?
Well, Paras, what we are seeing is that the new vehicle growth is quite good. And based on that, obviously, we do factory fill for a number of OEMs. So new vehicles are coming in, as you've been reading in the papers also, the new norms of loads, and the fleets are getting more modernized. So construction equipment also we see uptick. We supply to few construction equipment OEMs. So that again comes like a commercial vehicle for us. It's a vehicle which uses diesel engine oils. And even when the vehicle population of new vehicles goes up, the uptick on the dealerships, because they're under warranty and they also come back for servicing. So these two segments, we clearly see that commercial vehicles is doing well. Also, we could say that construction equipment, because of the infrastructure activations going up, we definitely see that the projects are coming up, the metro projects, whatever projects we are seeing around road building. So these are areas where we see good activity happening.
And sir, could you comment a bit on the drain intervals? What are the, do you think they have been arrested, long drain intervals, or do you think the drain intervals continue to go up?
Yeah, so I think they have stabilized. If you take the introduction of, we were the first company to launch the 80,000 kilometer oil in India. I think what we are seeing is a stability now, because, when you move into BS6 and all, people will be looking more for fuel economy now, fuel economy and other things. So already those tests have started. So I think what you see is definitely overall the drain interval in the dealerships, etc., have stabilized. Maybe the bazaar market, people are going to little bit extension may happen, but overall it looks like it's now kind of reached a level where people are, having the highest spec in terms of the diesel engine oil.
And sir, last one from my side, do we still maintain 2x growth of the industry kind of?
Yes. So we have been growing consistently 11%. Industry, we understand, is growing only 2 to 3%, maybe a little more in the bazaar, 0.5%, 1% more. So that our volume growth has been consistently 11-12% over the last many years. Even this year, before this record quarter, we were at 13% volume growth. So this is basically our strategy to grow in the segments, and also we have got new customers coming and joining us, new businesses we have been looking at in terms of segments. So we've continued, I would say, more than 2-3x, but we would like to continue to have a minimum strategy of 2 to 3x.
Thank you, and all the best, sir.
Thank you, Paras.
Thank you.
Thank you. So that was the last question. I hand the floor back to you all.
Yeah, thank you. I think we'd like to thank everybody who's joined the call. I know it's been a very busy day, and we definitely had a lot of calls across industry happening. And I think Manish and me have tried to explain to the best of our ability whatever we could share on the business. Definitely a positive push in this quarter, and we are hopeful that we will continue to look at a much higher plane of growth in terms of volume. And certainly Jan, February, March quarter is going to be an exciting quarter, and we will continue our strategies. We will ensure that we continue building our brand, our distribution, and we definitely look forward to taking the momentum up and sharing with you soon in terms of the progress that we have made in this coming quarter and what we plan for the future. And surely like to thank all of you and for your good wishes, your support, and hope that we can live up to the expectations. Thank you so much.
Well, thank you very much.